What is going on, guys? Welcome to Stock Talk with Nico Kritikos. It's been a while since my last video, and that is because I've been busy with not only performing musically at my gigs, but also me and my friend have been working on a new business the last month and a half or so, and that's been taking up a lot of time. And not only that, but still the stock market ever since my last videos was when the stock market was crashing, and I made a lot of videos about what stocks I'm buying, when I think the market's going to recover, all that stuff. And so that was pretty much explained, and since then the market's pretty much been going up since then. I think the bottom for the QQQ was like $400 a share. Now today it's $480 a share, and I'm going to show you, everything I've been doing. But today's video is mainly just about that I have started trading on margin for the first time ever. And so we're gonna go through that and see how that works because so I'm doing this through Robinhood, and to be honest, I would say the support center there, or the help, is not very good because there's nobody you can talk to on the phone. All there is like a chat bot you can talk to online. And so it's not super helpful, not super I don't know, it doesn't give you a lot of confidence in, because I've never traded on margin before, so I don't know every detail about it. But over the last couple of weeks, I have learned a lot more, and I have a pretty good idea of, what's going on and how it works. So what we can see here, this is my settings for margin investing in my Robinhood, and it says, so I put a borrowing limit right now. I put a limit of 15,000, which means I am not allowed to borrow over 15,000. And however, my total margin can actually be 163,000 if I wanted to do that much, but I don't. Right now, as you can see, my margin used is only a little bit over $14,000. And my margin maintenance, this is one of the scary parts, which this is one of the more important numbers on here because a lot of times what you hear about is people getting margin calls, right? And that's why there's a movie on it. This is something that people worry about a lot, because when you get a margin call, that means you're in trouble. But the good thing is, let's just put it this way. With where my account is at right now, I don't think it's realistic at all for my account to go back down to $36,000. So it had to be an end of the world scenario for that to happen. And so I'm really not worried at all about that. I was expecting it to be a lot higher. I thought, like, I don't know. I thought you got a margin call if it dropped, whatever, 30%, 40%. I didn't know how it worked, but it looks like that is my total portfolio value would have to drop to 36,000 for me to get a margin call. So I'm not really worried about that. This number, today's day trade limit, I don't know. I don't day trade, so I didn't do anything with this. I don't use this number. Um, I'm not, so that one is kind of not important right now. These numbers are important. So this is, I believe, yeah, this will be my first billing date for using my margin. So okay, so obviously margin means you're borrowing money to trade, right? That's what I'm doing. Now, I have to pay interest on that money I'm borrowing, which is, the interest rate is 5.75%. Okay. And so just for context here, well, let me show, I'll show you, let's finish this and then I'll show you the next page. So, okay, my yearly interest rate, 5.7%. That means if I hold that 14 grand for the entire year, I'll have to pay 5.7%, which I believe is like, I don't know, it comes out to like 700 bucks or something like that. Unpaid interest, that means this is how much they're charging me for this month, which I have not paid any interest yet. This will be my first payment. And so as of next week, it'll probably be whatever, close to 60 bucks or something for the first month. And then monthly gold fee, this is nothing. This has been, Robinhood has been I've had this for years, and to be honest, I'm surprised this isn't more, because this was like, I think I was paying that price like 5 or 6 years ago. So I'm surprised it's not like way more than that. But anyways, what did I use my margin to buy? It's something that I feel the most confident in, and that is going to be the QQQ. So as you can see, I got a very large position in the QQQ because this is what I feel most confident in. And it's not, of course, I also own Amazon, Microsoft, Meta, Nvidia, all these other companies, and that's great and all. But it doesn't mean that, even though my confidence is very high in those stocks as well, it doesn't mean that those stocks can't, be stagnant for 6 months or something. Because Amazon just did that a year ago, and it doesn't matter what the company is, even Microsoft, stuff like Google, whatever it is, they can sit at the same price, or maybe they do drop a little bit. Who knows? Maybe they have a one-time thing happen, and the stock drops. The QQQ, I'm not that worried about. I know this is, to me, this is the closest you can get to a guarantee on, you know, a return on your money and for it to keep going up. This is as close as you can get to a guarantee. So I bought the QQQ. As I was saying, for context, I was buying this at, as you can see, my cost basis is 478, but I was buying this, way higher than that in the beginning. As the market started falling, I was buying at whatever 520, 500, and 480. And then I didn't start buying my all my margin was bought when this index was trading at about $420 a share. Yeah, I want to say 420 was when I bought some, and then I think I bought more at about 400. And 400 was the bottom. If we go back here, see right there, it says 416, but that is not what it was. It was the, I don't know why it says that. 415. It was like 398. This QQQ definitely here. Let's see, we can even go down here. No, it doesn't show. But see, I was buying these at 420, 430. I'm pretty sure I bought some at 400. Anyways, the point is my cost basis is 478. And so, as of right now, I've made money on it. And really, if the shares I was buying at 410, 420, those I'm probably up, you know, I'm up however much on those, and that's way more than what I'm paying in interest. So really, I could sell now, and it would make sense because I'm only paying 0. If this month, if I got 14 grand in margin and I pay 50 or 60 bucks, that's like 0.5% or something, right? It's like 0.4, 0.5% in interest. And so if I made whatever 6% or 8% on those shares that I bought, then okay, that's an easy 6 or 7% profit on all the shares I bought with margin. But I'm gonna hold this because I want to make like 30%. I want this to be well over $500 a share for this index. And then when that happens, if I make 30%, even if it takes me a year, it takes me 9 months or something, and I end up paying whatever. If I end up paying 5% in interest or something, and I make 25%, that's more of what I'm looking to do. Because a lot of times when you have these big crashes like this, you do see the market go up 30, 40% a lot of times. The year after. So we could even put in like stock market annual returns by year. Let's see if we could get something quick here. So this is the S&P 500. This is actually going to be, this is more conservative. The triple Q will actually do more than this. Like it's been doing, and not only that, but I've been noticing the last couple months my account has been outperforming. Whenever I check what the QQQ is up, like today, I think it was up 1%. I was up 1.2%. So like I've been consistently outperforming, and I think that's just because my portfolio has heavier weightings in companies like Nvidia and Amazon, Microsoft, whatever else is in there. And so those are probably, making it outperform compared to just the index that has whatever, all these other companies like Walgreens, Verizon, all these stocks that don't really help much. So let's look at this though. So we have 38% drop. We're not that extreme this time, but the point is 23% that year, 30% this year. And again, this is the S&P. The Nasdaq's going to do more. The Nasdaq will do higher numbers. So here's this drop next year to 29%. Here's this drop, 19%. We did 24% the following year. But let's see, can we even look at, I don't know. The point is the QQQ will outperform the S&P, and so you're like, watch. Okay, so the past 5 years, the QQQ is up 121%, and the S&P is up 95%. Okay, so you're gonna outperform. That's why I have nothing in. I don't think I have anything in SPY or in S&P. I think it's all in the Nasdaq, just because it's basically the same thing. You're just weighted heavier in the tech stocks and the stocks that outperform typically. It's just, I don't know. I want to be in companies like Nvidia, AMD, Taiwan Semiconductor, all that stuff. So this is kind of my strategy with this, and how I said when I'm expecting this to be, I think we can be at an all-time high by like within a year from now. Like 2026, I think we're going to see, I think this can be easily over $540 a share, right? And I talked a lot about the tariffs and the Trump drama, and the political stuff and everything that's going on with, whatever, Russia and just the way Trump is dealing with all these countries. And so, to me, I don't think it's an end of the world scenario yet. So I don't, and you can, I mean, again, you can already see the money piling back in. Like I know this says $415 a share, but it went to 400. You can check it. There was one day it went to 400. So the point is, it's. I mean, look at we've been up and away since then. We've had a little dip here, April 20th, a little over a week ago. But I mean, I think we're gonna if we dip this week, okay, well then we're gonna recover the following week, and then before you know it, we're gonna be sitting back at $540 a share, probably within the next couple months, and then I mean, I think we'll have a new all-time high this year. I feel like we'll get it by November or something. We'll probably have a new all-time high. So, and then when we keep doing that, when the market goes way back up, then I'm going to be like, okay, let me take some profits, get rid of my margin. Because if you know me, you know that I'm not big on borrowing money, credit cards, anything like that. I don't like being in, I have no debt. I don't do loans. I don't do anything like that. I like paying for everything in cash and having, only buying things I can very much afford. So this is not like me at all. And in the past, I've thought about doing this before, but I was scared just because, I've heard stories and, trading on margin, it can be scary. Um, but I feel like when the market crashes, that's your chance to be like, okay, I'm going to invest now because so much risk is taken out at that point. I know there's lots of people that will tell you the opposite. Go watch my TikToks. You'll see 1,000 people telling you that, oh, the market's going to keep going down. Because I was saying, I mean, I called the bottom. I predicted the bottom was going to be at 435 or something, and it went way lower, obviously, to 400. So I was off, but it doesn't really matter because I ended up buying more shares, lowering my cost basis, and now I'm sitting at 478 again, which is not the best, but it's not bad at all. When we're back over 500, we're going back to $540 a share over the course of the next year or two, it's not gonna look like a high number. But right now, when you're trading at 400, 430, these numbers, it doesn't look it doesn't look like I got it cheap. But really, I'm fine with that. So yeah, that's really it. I mean, I think it's just I felt my point is that I'm a person who is, very skeptical with things, and I'm not looking to borrow money. I'm not looking to do things that are dangerous or risky. And so for me to do this, that means that I was very confident that this was extremely low risk. That's the way I see this. When the market drops, I think the market dropped 22%, 20, I don't know, 20. The QQQ dropped, let's see, what's 400 divided by 540 is 74%. So yeah, so 26%, that's a lot. We dropped 26%. That rarely happens, right? I mean, we just looked at the S&P chart. You don't get 26% drop. I mean, there's barely any years where the market actually goes down, right? I mean, last 20 years, there was only 1, 2, 3, 4, 5 years that it fell, right? So, I mean, and I think that's right. I'm pretty sure the statistic is 78% of the time the market goes up. That's 75%, right? That's right on with the statistic. So not only that, it's not like we got a 1% or 5% drop. No, we got a 26% drop in the QQQ, which has not happened. We might not see this for another 5 years or something. So that's where I'm like, a lot of the risk is taken out. A lot of people will tell you that I'm wrong, or not that I'm wrong, but when the things are crashing, they're gonna disagree with me like they did this time and back in 2022, the same thing happened. So people are gonna say, "Oh no, Trump's gonna make things worse. Think we're gonna go into a huge recession." I had my friend today text me, "We're gonna go into a recession still." All that stuff is I pay attention to the statistics. The statistics say 75%, 78% of the time the market goes up. Okay, well, if that's true, that means I want to be in the market. If we have a bad, worst case scenario, you have a bad year, like 1 year ago. Like, look at there's no time here where the market went down 2 years in a row. Like, it doesn't happen. Like, it goes down for 9 months maybe, or 12 months, 15 months. You don't have a market that drops for 3 years straight. And then sure, I mean, you got people that say, "Oh, well, look at the great, whatever, the depression, right? The Great Depression, all this stuff." Okay, well, if you want to if you want to invest like that and say, okay, I think once every 100 years we're going to have a horrible crash that lasts a couple years. All right, well, I'm not going to bet my money on that. I'm going to put my money according to the statistics, which says 78% of the time the market goes up, right? So my whole point with this all this rambling is that the market went down enough to where I felt confident to actually trade on borrowed margin, which that's something I would never do. Okay, so I think that's enough for today. If you got any questions or comments, I'd be curious to hear your guys' thoughts. So comment down below what you're doing, or if you've had any experiences with margin, or if you're thinking about investing a margin. And I will see you guys in the next video.